Some updates in the market this week. The major banks released their second quarter results, and everything looks positive. Scotiabank, I think, took probably the lion's share of the headlines because their results were really good. But BMO, TD Bank, RBC, they're all excited about the news of kind of how the second quarter went. Obviously, a sign of the times. I think if you look around the Canadian economy, things generally speaking are kind of stable to good. They're not maybe excellent, and the heydays maybe aren't here, but generally speaking, I think things are okay. Because I've been doing this for so long, I've got 18 years of working in the debt market in particular, and working in small transactions, even to even narrow it down a little bit more, small being less than 10 million. History teaches me that it's the third quarter results where the truth really comes out. And so I've noticed year over year over year that the first quarter, not a lot of excitement. Second quarter tends to be the big announcements where everything looks amazing and earnings are being exceeded and revenue is great and net income is really good. And then it's the third quarter where it gets a little spooky and a little shaky. So of course, very excited for all the banks, great for Canada, everything's, it's all wonderful. But my real question is, if you took the time, and you should, if you're looking to fall asleep at nighttime, you could pull open the financial statements from each of the banks, and in particular look right at the profit and loss statement, and you can see kind of where they make their money. But it's interesting to see all of that. And my question is, even though these results are good, where is the real growth coming from? I think that if you look at the news, you'll see that Scotiabank actually attributed a lot of their great activity to what was happening overseas. And that's good for them. TD Bank mentioned that their operations in the US still are kind of not really doing as well as they would have hoped. And then RBC and BMO just sort of indicated that everything everywhere is great and wonderful. But in what we're seeing every day, I can't really get my hand on, or I get a handle on rather, where all of the excitement and where all of the growth is coming from. Banks really only make revenue two ways. They borrow money from you and me at nothing, and then they lend it out and make the difference. The second way is through offering other services like ATM charges, bank charges, wealth management, kind of all of their other ancillary services. So those are the two ways they make money. And are these good results because the banks are doing really well themselves? Or is it because the general economy is holding them up? And I tend to think it's just the general economy holding them up, because I'm not really sure that we see banks being incredibly innovative anywhere. And if they're making more money, if they're actually bringing in revenue, that's a good thing, although the growth there I think is pretty minor. But if they're cutting costs to make more money, then that tells you that maybe people are being laid off, or there's new technologies that the banks are employing to try and save more money somewhere. So it's great that the banks are doing great, but I don't really see that it's attributed to anything of value. I think that in what we do every day, because we're dealing with small businesses, transactions that are less than $10 million, it's kind of still a grind out there. It's pretty tough to get residential mortgages. The banks make it very tough to get mortgages for homes today. You'll notice the changes with the vacation homes and the rental properties and self-employed people. I mean, these changes are going to catch up with the bank results somewhere. Maybe not obviously in the second quarter as we've just seen, but I think it's going to happen here in the coming future. And for businesses, it's not as if banks are bending over backwards to give money to businesses. Now, I put a lot of the burden on the businesses because I think generally speaking, private businesses are not well prepared when they go talk to their bank. And banks do have money to lend to them, but banks aren't really doing anything to help private businesses figure out how to access the money. So I don't see a lot of growth opportunities there. So anyway, those are my comments for what it's worth. It is interesting to see how the banks make their money, and I hold this opinion that governments don't really want banks lending money or taking risks, and banks are more seen as a bank vault as opposed to centers of innovation and creativity and really trying to figure out how to spur anything to the next level. But that being what it is, I would just I'd say, hey, that's a good job for the banks, and let's see what the third quarter brings us, and start thinking though, if you're someone that looks at banks to make investments, or you buy their stocks or their shares, you should be considering though that the changes happening in the residential mortgage market, which have been really huge. One by one they're not huge, but collectively the changes are huge, and at some point those are going to figure themselves out. And so maybe now's the time to take some money off the table with the banks if you happen to own their stocks.